If you're wondering what are the main differences between a checking and a savings account, this video is for you. Now hang in there with us because at the end, I'm gonna show you how actually having a savings account will allow you to not only grow your money more, but allow you to keep attracting and make more money too. Here's the thing, savings accounts pay you some interest, while checking accounts pay you almost no interest. What are the difference? Now checking accounts, you've probably seen those before. You might even have one yourself, and they might even made you set up a savings account that put $1 or $5 minimum in there or something like that. But a checking account is usually an account that you use to pay your bills every month, right? The money's coming in, it's going out, it's just in and out all the time. Now, for the most part, banks will pay you nada, a big fat goose egg zero on your checking account. Every once in a while, a bank might pay you a teeny bit, but it's pretty much non-existent, whatever the interest they're gonna pay you. So a checking account is great. There's a purpose for it because if the money is coming in and out, you may not be able to earn a whole lot of interest anyways. And so checking is perfect for that. You have the ability to write checks for those people like back in my day that actually used to write checks and use those things. For this day and age, it's best if you just got your little debit card, you're just swiping and using it all the time. And again, that's where usually your paycheck goes into when you get paid every month or every week. That's the money that's coming in. And then that's the money you're paying most of your bills with. Where a savings account is a little bit different. You know, a savings account is usually meant to sit there for a period of time. Now, it may not sit there forever, but it's gonna sit there for a period of time. Now, because you don't take the money in and out all the time, banks wanna pay you more. Why? So banks are taking the money out of your savings account and they're using that to lend money at 3, 4, 5% interest. You know, if you get a mortgage on, buying a house, if you're getting a car loan, even credit cards, that's the money they're using. So they want you to keep this money there. This is why they encourage you to keep there to earn interest so then they can make more. So yeah, you might make a piddly 0.1% interest at your bank savings account, but they're turning around and loaning at 3, 4, 5%, making massive money off of you. That's why they're gonna pay you for it. Now there's a purpose for this. The one benefit of having a savings account is that you may not want to spend it. You may want to keep it there and keep it safe. It's money you can keep there in case of emergencies. If your appliances break down, like your washer and dryer, your fridge, if your car breaks down, you want to have money available for those kind of instances, right? Those kind of emergencies that come up. If you got to have money coming up for a medical bill, this is the money you may want to use. So that's a good purpose of having it. That's really the mindset of why you want to have a savings account. Now, here's the thing you got to look for when you're at different banks. There are different terms to these savings accounts, and some of them can actually really suck for you. You may not want them. So for example, some of them will ask that there has to be a minimum balance in that account. If you don't keep the minimum balance, they pay you nothing. So they might say, hey, we'll pay you a great interest rate. And it might even offer you a higher interest rate, but you might have to keep at least $250, $500, $1,000 in there, or they won't pay you a dime. So be careful of these terms. Be sure to watch out with these savings accounts. They might also say you can only access it so many times per month. There's another type of savings account called a money market account that might pay a little bit more, but they might say you can get to it, but you can only get it out twice a month or maybe 6 times a month. So again, if you're gonna have these savings accounts, don't use to do a lot of bill paying and things like that. They will not pay you as much in interest if you do that. And of course, if you pull out too many times, they're gonna stop you. And if you have a real life emergency and you already used up that 6th time, you might be stuck. So you wanna be sure that you do not go for the terms that say that they can only limit you to so many times per month unless you're okay with those terms. And like I said, some of them have minimum balances. Some of them will require keep a certain amount to always stay in there. Be sure to see what the minimum balance is, what the terms are, so that you actually get paid. Some of them will even say, there's some online savings accounts you want to look into. And I'll put some of these down in the comments below of a really good paying online savings accounts. The thing I like about these is that these will usually pay more than a bank savings account. Online savings accounts, they don't have to pay tellers, they don't have to pay for the light bill or anything else that goes on with the bank. They're just simply giving you an online place to deposit your money. The cool thing is you can transfer the money back and forth between your bank. Now, it might take a day or two to get there, so you do have to be careful of that. So you can't just walk into a bank and pull the money out. But some of these online savings accounts, they will pay you a much higher interest rate. So with my family and I, we actually go more for the online savings accounts than we do the bank ones. Yeah, we'll have the bank ones that we can walk into and pull money out that day from the ATM or from the bank teller, but we're just keeping our money there. We're keeping the money more in these online accounts that will pay us higher returns. The thing that's awesome is that some of these, not only do they give you easy access, but again, that mindset, it really keeps a separation that you can't just walk in and pull the money out. It really forces you to save. It forces you to keep money there so that if it's an emergency, then you access it. It gives you that extra barrier, the kind of the extra deterrent, right? To keep you from trying to pull it out all the time. And that's important because if you go from my experience, especially as an entrepreneur, I was one of those people that money was always in and out, and I wouldn't really save it. I would go to use it to pay off debts instead, or I'd go to use it to put in my business. I would go to use it to spend on baseball cards, like when I was in high school, right? Which, if you've ever seen any documentaries on that, I basically got ripped off. That was not an investment that worked out. All those 90s Don Russ baseball cards totally sucked. They were a waste of money. So anyways, I didn't keep the money. I didn't save it. So whenever emergency came up, I was scrambling, I was hustling. I would have to ask my boss, whatever they call them, my manager, my boss, I'd have to ask them for a pay advance so that they'd pay me my paycheck early. And then I have to try to figure out ways to scramble or be cheap for the next few weeks just to be able to pay for those things. So when you have that savings account, when you know it's there for those emergencies, I call it abundance insurance. It really protects your peace of mind. It allows you to actually build up money. And I'll tell you this, even if you earn 0.nothing% at your bank or your online savings account, here's the thing, is that when you have that money and you know you're safe, you know it's there, in my experience, you make more money. It's like magic. I don't know why it happens this way, but it's almost like you tend to make more money. Money comes to you more easily when you're not desperate for money. It's like, have you ever watched Harry Potter and the Sorcerer's Stone? Have you ever watched that one, right? I know I'm just nerding out, just sharing this with you. But you remember Harry Potter finds the stone because he didn't want it. He didn't want to use it, where Voldemort couldn't get it. By the way, if you haven't watched Harry Potter, spoiler alert, I just ruined it for you. That's the end of the movie almost, but hey, I'll let you know somebody does survive, okay? Regardless, but he gets the stone because he doesn't need the stone, while the guy that needed the stone couldn't get it, no matter how hard he tried. The same thing is true with money. When you desperately need money and you need the money to come in, that's the time that money seems so hard to come by, isn't it? That's the time when you need it the most. That's when you can never get it. Having a savings account, even if it pays you very little, in the grand scheme of things, pays you a lot, because that's what allows you to grow your money. It allows you to think more abundantly, think with a level head, because you're not desperate just trying to get that money like you need it, right? It's not like Tommy Boy where you got to get that sale and you ruin it and you kill your pet, right? You don't want to kill your pet. You want to keep your savings. You want to make it work for you. So that's the key. The mindset is really to have that savings account, allowing it to build and grow, protect you, protect your peace of mind so that you can make better decisions and you can start to build your path towards having greater wealth. So to recap, here it is. Checking pays you basically nothing, but it's great for when money comes in and out. You can use it for whenever you want. Savings, however, can pay you interest because the bank is using your money to lend out to other people, and that pays you more money. But remember, you got to watch out to see what the terms are. What kind of interest rate do they pay you? And what do they require for that interest rate? Do they make you keep a minimum balance in there? Do they say you can only access so many times per month? That's the key that you need to look for. Now, I'd love to hear from you. Comment below and let us know, what kind of accounts do you like? What kind of checking or savings accounts are you using? Share that with us right now. If you like this video, go check out our other video about how to diversify your savings so you make even more money on that savings that you're putting away.